Most people point to it as kind of the single guiding light to them in terms of the relationship of Bitcoin's price to these halving cycles. So talk us through a little bit about what the stock to flow model is and then what it's showing us so far.
Yeah, so the stock to flow ratio is a ratio from the commodities market, actually, that tells you something about an asset's scarcity. It divides the stock, the reserves of a certain asset by the flow, the newly issued Bitcoins or gold, newly mined gold. And if you divide the stock by the flow, you get the stock to flow ratio. So that ratio was known for ages in the commodities market. What I did was connect that with the market value of, Bitcoin in the beginning, but later also the other assets like silver and diamonds and gold and real estate. And what you find that there is a perfect linear relationship in the logarithmic space. So that was quite shocking, and with that you can actually predict the price of Bitcoin very roughly, I should say, but you can do it, and because we know the stock to flow ratio of Bitcoin, it's pre-programmed, and that's a very nice thing, and it's of course very bullish at the moment. It predicts somewhere around $100,000 Bitcoin for the current halving cycle, which is 2020, 2024. So we're actually heading towards that.
Tell us more about the institutional interest, whatever you can share, whether it's organizations that you work at or have worked at, or just kind of conversations with former colleagues, peers, people you know in the industry. What's the general sense from the institutions in terms of Bitcoin, what they're allocating, how they're thinking about those allocations? Yeah,
so I'm Amsterdam-based. I talk a lot with European investors, some US investors, but it's mainly a European perspective that I have. Well, certainly the companies that I worked were not very interested in Bitcoin yet, mainly because of regulation and misinformation, if you will, because most of them thought it was for criminals, it was for and governments would ban it and all that, and of course for an institutional party like a bank or an insurance company, they have capital regimes with their central bank, so they'll have to put capital aside for every investment they make. If the investment is more risky, like Bitcoin, they have to park more capital for that investment. And for Bitcoin, it's almost 1-to-1. So if they would do $1 billion in Bitcoin, they would have to park $1 billion in equity as well. And that is of course not doable. It's more doable for hedge funds. So what I see is it's not the big institutions, pension funds, insurance companies, and banks that are investing on their own balance sheet or are interested in Bitcoin, but it is the hedge funds, the family offices very much so, and commodity investors, especially the gold and commodity investors are of course very much into the same philosophy that Bitcoiners have with sound money. Yeah, so family offices, commodity investors, and hedge funds. Those are the ones I see active, and the other ones will be late as usual.
And when you wake up in the morning, like, what do you check first? What's the data sources that you find most valuable, or in terms of just understanding what's happening in the market, whether it's the short-term or long-term period?
Well, to be honest, the price is one of the first things, the Bitcoin price, one of the first things I check, because that's the most accurate and timely information. If it's the same as when I went to bed, then nothing happened. If it has a big delta, then something happened. And then I go on Twitter, which I find is the most direct and accurate information source there is. Because one thing I learned is to not read mainstream media or watch mainstream television or even media sources like CNN and Bloomberg or the Wall Street Journal that are considered the creme de la creme in institutional investing. I've learned that with these new investments like Bitcoin, you better ditch those standard sources and go to Twitter and the experts in the field, because that's the most direct way of getting information.
Yeah. And when you think about portfolio construction for yourself or for the institutions, maybe both, is this still something that is like a very small allocation, or is it something that is being used to like denominate the whole portfolio? Or how do you just think about the portfolio construction and any sort of concentration targets?
I think for institutions, of course, that's very important to keep the risk profile sort of constant and within their mandate. So they'll have to sell Bitcoin as soon as it rises to keep the concentration low and within mandate boundaries. But with hedge funds or family offices or for my own investments, I don't have those mandates or boundaries. So I can what I see in practice that what starts as a small investment, a couple percent investment in Bitcoin soon grows to a double-digit position in Bitcoin, and after a few years, 4 or 5 years, it sort of dominates your portfolio. That sure is true with my own investments as well.
What do you think is the likely price for Bitcoin by the end of the year? And do you think that the bull market ends at the end of the year, or does it carry us into the beginning of 2022?
I would be very, very surprised if Bitcoin price would be below $100,000 at the end of the year. That would, sort of invalidate my view, my models, and that would certainly surprise me. I do think we will see a price that is at least $135,000 by Christmas, because that's what my floor model says. And basically, I'm using 3 kind of models that all say the same thing. So stock to flow, which has 100,000 on average for the entire cycle. Mind you, we're 1.5 years into that cycle and with below 100,000 prices. So we'll have to spend the next 2.5 years markedly above 100,000 to make that average. And the second model I use is the on-chain stuff. That on-chain stuff is really good at identifying bottoms and peaks. So we're now talking peaks, of course. So I know quite certain, not guaranteed, but I will have high confidence in that the on-chain indicators will signal a top. And if we look at the on-chain signals right now, I would say that top is at least a couple of months, say 6 months from here. So that would be end of Q1, maybe later. And then the third kind of models that I use, of course, that floor model, the 135,000. That's not based on stock to flow. It's based on other. It's a proprietary thing, but it's based on other stuff, technical and on chain. I guess we will be above 100,000, above 135,000 at the end of the year, and then we'll continue to grow, maybe towards the stock to flow X model targets, 288 or even above. I would not be surprised even to see in Q1 or Q2 next year prices of 300, 400, 500,000 dollars. But I do think. And I noticed you were talking before in this show that I'm full bull. I am right now, but I'm quite sure that there will be a time when I switch from bull to bear, like I did at the end of 2017. I'm a bit of struggling with that because I don't want to disclose it, because I want to at least disclose it responsibly and not be responsible for triggering the bear market. People have ideas for that, I think they're very welcome.
And so when you think about that $288,000 price, I think a lot of people have heard you say that before. But when you say that it could go higher, $300,000, $400,000, $500,000, is that just pure kind of FOMO and a blow off top that drives that, or is there something else that you're looking at that shows that, hey, maybe we do go past that 288 that the stock to flow model has there?
No, that will indeed be a FOMO, and that will be very clearly marked in the on-chain analysis, which is looking for certain kinds of transactions that which I called them before, but those are FOMO transactions. So if the algos see the FOMO kind of transactions coming in, then the end is near. And yeah, so I would envision like, for example, going to 500K somewhere Q2 or something, and then crash back maybe 80% again to 100K, have a bit of a bear market, and then continue another cycle starting with the halving in 2024.
Going from 57,000 today to 500K in Q2, back down to 100K, and then continuing into the next halving. While it sounds crazy to a lot of people, would be pretty consistent with what we've seen in the past in terms of volatility, both up and down. So it's interesting to hear you say that.